Welcome back to another video, guys. I took two trades that were wins, two that were losses, and the wins outdid the losses, but still, nonetheless, I was in the trade with risk on the table, so we got to go over it because I'm minimizing the mistakes, but they're still not just fully out of the way, which they're never going to be, but we just have to do the best that we can and always become better. Always try to become better. So let's just look at the cycles for the day. I need to still clear up space on my computer, but that doesn't mean that we can't have like a 10-minute video, I think. So on the cycles today, I saw this as AMDX. If we can look at all the indices, we actually had YM sweep in our distribution cycle, which is actually our manipulation cycle because I thought that this was going to be our manipulation. I thought that actually CPI ruined our manipulation, but this was going to be our accumulation, manipulation into OTE of the range, and then distribution. You see we got that on ES, so that's really the structure that I was looking for with the daily supporting, daily for value gap supporting. I thought that that was going to be our main objective to just tap into OTE and then come in higher. We also had this 4-hour bullish, so after CPI got taken. Looking at the range, I'm looking for CE to get rebalanced, which means I'm looking for this 4-hour, and I'm surprised that we hit this 90-minute low to create our 90-minute cycle to send us bullish with our daily, because we were bullish on the day no matter what, but it just mostly happened in Asia. And so since we got CPI and our target, which was my target, true month open, but really ideally my target was going to be true month open and then this high right here, which CPI was likely to take. So after that, it was going to be this gap. So these two, this buy side liquidity I mentioned up here, or I haven't mentioned yet, but I've noted. So buy side liquidity is the same. I actually need to change that to green. But the same thing on ES as well. We have all-time highs above that, and we're further from all-time highs on NQ. So what I'm looking at was just that near target. But for the intraday movement, we'll go down to the 2-minute, or sorry, the 1-minute. What I was looking at was a long initially because just structure was looking like it was going to long off this to send higher. It was more of an impulsive long. I did not even wait for 9:45 again, and that's when we got our Kraken correlation exactly at that time. So, or sorry, our microcycle SSMT, which is this. This is our microcycle. I call them Kraken correlations, SMTs, Kraken correlations, because if it's pivotal, then it will move the market to an objective for that PO3, which for the 30-minute PO3, 10 a.m. continued and hit our 90-minute low target, which set us up for longs, which is our, I used 10:30 for the entry of. I did not take this long, the reason being because I would have had to have a stop all the way down here for it to be quote unquote valid, which mean I had to lower the size or else I'd blow the account. So I did take it up here. If you're wondering why I didn't take it down there, is because I didn't want to take a small loss trying to predict like the bottom of this reversal before creating an SMT. That's like the real reason. If they create an SMT here, sure, that allows you a lower stop, but if that doesn't happen, then you have to find means to get a lower stop with it running without you. So that was this entry right here, stop at the low of 10:30 price, which is in our 90-minute candle. So I was trading the 90-minute candle. I sold early because, I'll tell you the reason, I didn't think that this target was going to get hit in a shorter amount of time. I thought it was going to take much longer. So it didn't even hit there, and it's going to take much, much longer to get there because it retraced. And that's what I was afraid of, because this is internal. This is an internal position. It's going to get hit. I did not enter at this low. I did not enter at this low. It is going to get hit, and I'm going to make nothing because I do not want to put risk on the table. So that is why I exited at that point. Also, the point of time. Expansion on the 1-minute. Accumulation is next. I count this not as accumulation but expansion because of how we were trading close to this for a reversal. So expansion, accumulation, manipulation, meaning we're going to take out discount of the range if we're going to retrace, or we're going to continue higher, but we're going to accumulate for a while and then take this manipulation out if that's going to be it. That's how I saw this exit. Manipulation is either going to take this in reverse or it's going to come down here and stop me out. So I had profit and I just took it. That was the premise on that trade. This one was just stupid. I was just trying to long it because of this news candle. I just saw it like literally hit instantly after 10:30. This fair value gap right here, that entry was completely valid to take. 100% completely valid to take. You could have took longs there, stop at 0.705 of the range, and then taken that to that high. And the retrace wouldn't have stopped you out, even though a safe, like a real safe stop, would be at 90% of the range, which is a bit longer, but you still would have hit target, or you would have been in the trade to be in profit to hit the target. So managing it is all dependent on you, but this entry was very, very good. 1030 model. We were continuing the movement uh, of our sweep from 10 a.m. And we mentioned this when 10 a.m. hits the draw on liquidity and then we reverse. That is sign that our 1030 is going to be continuation. So this inversed, and ICT was actually mentioning this. Then we had a discount entry, which is right here, and then right there for re-entry after this one right here. But looking at the short microcycle, we had it. We had the and we had a daily cycle as well. So there's daily with YM. It was with YM, so not with ES, so a little less strong, but it's still enough to send us to a target and for 10 a.m. to be our not high time frame move continuation from 30-minute PO3 because our SMT was in 30-minute PO3. 10 a.m. did not continue, it just continued to the draw, and then we reversed using 1030 as continuation to move to our internal draw on liquidity. Today's an internal day. This is obvious to see. We're not moving in any single direction. We're moving inside the range in both directions, which isn't seek and destroy because we have a large range. So it's just an internally trading day because we're in this 4-hour gap that I was looking to trade to in that 4-hour candle. I'm surprised it didn't go there. And now that created enough bullish momentum with the 90-minute to trade us internally, but not to the high. So what does that tell you? That tells you we're waiting for another day to trade. So that is it. That is all the analysis I had, and really there wasn't much other than the two trades that I mentioned. This 1030 entry right here was the long. If you did not enter off of the sweep of the 90-minute SSMT, then this 10 a.m. short trading was a little bit higher stop. I mean, still, like I say, the stop is safe above the candle that got swept, but it got really, really close. So having a stop at the higher safe stop loss was 70 points, even at 10 a.m. price. So, yeah, it was a bit difficult today. Definitely had to lower size. I did lower size, and still I lost on a trade, and it kind of played into me trading throughout the later session. But I was able to read it and come back and lower size and emotionally manage myself for this trade. And even after this impulsive loss, just losing money for no reason is what this is, because you're essentially what this is. I'll tell you what this is psychologically. This is you entering the market, or me, in fact. This is me entering the market, and you if you do it, because I want to help you change this mistake. Is you entering the market and just speculating while having an open P&L because you want to be in the right direction. Because this is a point of reversal. Like if we're just reading order flow, around this area is where it starts to retrace. If we look at OTEs and time-based PO3s, you know when it's going to move back into a range or if it's coming back into a 5-minute. So don't gamble to attempt just getting in on the volatility of the PO3 opening or whatever, because you don't have a target, you don't have a stop loss, you're just in for open P&L, and what is enough to you really? You're going to expect it to be as good as your other trades. So don't do that. I do it. I need to help myself get better at that. But I'm saying one more thing actually ICT was mentioning, give you some sauce. He was saying that because I exited early on this wick right there, like literally where the high was before it moved lower. And ICT says the best way to manage your position, because right here we have time-based liquidity. This is the microcycle low. This fair value gap right here, very, very slight. The one, if we get any gap or if we have any, I'll just mark this one black. If we have any gap or wick, shadow wick, which is the lower wick, or if we're bullish and we want it to continue higher, we want the bullish wick. If there is any wick where CE is not closed above on the actual candle, and I'm talking about it wicking up here and price coming, who knows, if it comes all the way up here, if it wicks up in these wicks but closes under the order block, yes, but make sure the body of the wick of this new candles are under CE. If it's under CE, then this is the highest probability that it's going down lower than that, or it's going to search some kind of price and then you can get in off an inversion, but you'll at least be up in P&L with the movement. So holding based on the fair value gaps at that form at this level, at any time-based low like microcycles, 90 minutes, or the same right here, right? These are closing above CE, like literally exactly above CE of this wick. And since this is a time-based low, if it's Asia session low, if it's London lows, if it's New York AM lows, if it's 90-minute cycle lows, if it's microcycle lows, if it's 4 hour for value, I wouldn't use gaps. I would just use the time-based lows and then use the wick on that. Not necessarily the 5 minute, but like the 1, 2, and 3 minute. Like I say, if you're looking to hold like on that 2 minute wick, it would be still about in the same area where we'd get that bullish candle. And look on the 2 minute, it also aligns with CE exactly. So that is what I'm looking for structure to hold on those lows. I just didn't do it because I wanted to exit with the profit, and I just exited at a bad time. So that is my fault, but that is a little sauce for holding past lows that are getting taken. You want to exit, don't, because this reading this will help you hold longer, and you will get stopped out. Like if you read it right, you should have got stopped out right there, or at least somewhere in this high after this gets inversed. If you read it right. So letting this come to break even is an emotional decision. You should not let that happen because the trade was, or the model was out of play once the 90 minute got confirmed, and then this 1 minute inversion was extra confirmation. After that, your model's done. So you're not always going to hit TP, which it was literally right there. It was probably 20 points away, and it didn't get hit. Shit happens. Like that's what can I tell you? So these confluences, these concepts, they're always going to help you read price, but price isn't always going to help you get your entry. It's not always going to help you move to your take profit. It's not going to be at the levels you think it's going to be all the time, but that's just the name of the game when we're talking about probability. We can be right most of the time, but not all the time. But can you manage yourself when you can read the charts, but there's just nothing that you can do with your model? So that is it, reviewing price action for the day. I hope you guys got some sauce out of this. I definitely use this as a day to step in the right direction and start trading better because I've just been too lenient with the way I've been trading, and that's my fault alone. So I will see you guys in the next video, and I hope you enjoy the rest of your day. Take care.